Well, there we have it. Jerome Powell did not cut rates today. We are now stable at roughly an average of about 4.3% on the Fed policy rate. And while we've made progress towards that 2% in the commentary, Jerome Powell did remove the phrase "made progress towards the 2% goal" from the letter or the statement that comes out. Now, he says that's because they got rid of from the prior portion of the year because now they're in January and they're not comparing to the first half of the year anymore, right? So he's kind of like walking back. Don't worry. The reason we removed the term "we've made progress to our 2% inflation goal" is because we were just comparing to the early part of last year there. But I think the big takeaways here, and we'll go through some of the other details here as well, but the big takeaway, big one, is that we actually started getting Jerome Powell walking back what happened on December 18th. Now, if you look at the stock market since December 18th, it's been a little bit more tenuous, and part of that is because hedge funds have been starting to degross after the December 18th meeting because a lot of people were comparing December 18th to December of 2021. Basically, what they were doing is they were saying, whoa, first of all, for 2 months in a row, Jerome Powell's like, we're not going to consider tariffs in our policy. We're not going to consider tariffs in our policy. And then all of a sudden in December, you get Powell and gang going, yeah, we considered tariffs in our policy, and that's why we think we're basically closer to a pause. And a lot of institutions freaked out over this and thought, wait a minute, that's the opposite of what you said 2 months ago. Now you're flip-flopping. This is bad. Let's get rid of leverage. Let's sell some stocks and let's take some risk away. But Jerome Powell really walked that back today. He basically told us that so far they haven't seen much of anything on tariffs, which is true. We haven't had any actual tariffs start yet, and the president was inaugurated 9 days ago. We have not seen any tariffs yet. We've had talk, we've had threats, but so far no tariffs. So Jerome Powell's right about that in saying we haven't seen much yet, and so right now we're just not going to anticipate any kind of actions from Trump, and we'll just take it as it comes. So basically we're going full circle here. We're going from we're going to take it as it comes to, oh, we're pre-pricing in tariffs and we're going to tighten down the hatches, so to speak, to, yeah, we're going to take it as it comes. It's a full freaking U-turn again. We just went into a 360-degree circle, but honestly, the stock market kind of likes it. It's a good thing. I mean, if you look at the cues, this is when Jerome Powell really came out to start speaking. We got our statement came out right about here. This is where our statement came out, so straight down until Jerome Powell started yapping. When J. Powell started yapping, within about 2 minutes of him yapping, it went up, continued up, stayed up. So in other words, markets are pretty happy with what we got from Jerome Powell today. That is big, pulling that back. Something else that was pretty big is we actually got a solid acknowledgement from Jerome Powell that if the unemployment rate, if we ended up getting layoffs, then we would likely see the unemployment rate move meaningfully up. Now, the good news is we don't think we're going to get layoffs. We're not seeing layoffs right now, but it is possible that we end up seeing layoffs and they would substantially move the unemployment rate. This is something that Jerome Powell made pretty clear. He says we're in a low hiring environment, and therefore as soon as you see layoffs, we're going to see a meaningful move in the unemployment rate up. That would not be so good. And to that, though, he says we're not seeing it now, and we think we're going to end up seeing a stabilization, essentially, of the labor market to where we don't have to so much worry about it, which is kind of good. Now, when it comes to inflation, he reiterated some of Nick T's numbers that, hey, we're basically on standby in terms of watching inflation come down, that we're in a place where the PCE levels are sitting, much like Nick T said, sitting at about 2.8% over the last 12 months. The recalibration they've done has enabled them not to be in a hurry. That inflation is somewhat elevated, but they're kind of happy. And this is really what you wanted from Powell today. You didn't want Powell today to suggest that rates were on the table, rate hikes were on the table. He didn't mention it. In fact, if we look at our bingo card today for sort of expectations versus reality, take a look at what we got. We didn't get any comments about will you resign. He basically said he's not going to respond to the political questions. He did start with good afternoon and had a purple tie, but again, that doesn't matter. And, Smiley from the New York Times wasn't actually there. He was on time. He was actually asked about an AI bubble bursting, and he said, hey, yeah, valuations remain high on almost all metrics right now, including or mostly on tech and artificial intelligence. He somewhat alluded to DeepSeek, though we didn't get too much on DeepSeek. On DeepSeek, we had some sort of reference to we're all watching it, but it's really the macro impact that matters. He said higher rates are probably at the moment holding back housing, and that while they control the overnight rates, they're just watching the longer term rates. He does say that when asked about a bubble, that households are in pretty good shape, banks are in pretty good shape, and that he supports the innovation of crypto and some kind of regulatory framework so that people are understanding of what kind of investment they're getting into. Now, we've talked about this as well, regulation coming to crypto, how you could have two different types of crypto, one that's regulated, one that's not, just so you could really read like an S1 or some kind of prospectus. Jerome Powell actually reiterated to that today. It's almost like he watched my video on it. I know I'm just patting myself on the back there. But anyway, he says crypto activities probably don't belong inside of banking in the sense that if there's any risk, they could potentially jeopardize FDIC insurance. But as far as serving customers who invest in crypto, he doesn't see a problem with that. He's pro-innovation and encourages that as long as people understand the risks and have some kind of prospectus, hey, this is great, and maybe regulation can help that happen. He says, the quote, by the way, on that headcount reduction on the unemployment rate going up was, if you saw headcount reduction, aka layoffs, you would see the unemployment rate go up because the hiring rate is low. Now, this is just sort of like a problem that I personally have with markets right now, because I think that you have a Powell that today says, hey, everything is fine, there's no problem. But what you sort of have to balance is this issue of, okay, well, from an economist's point of view, just not political, just from an economist's point of view, what you have is tariffs restrict growth. Government hiring supports growth, but we have a government hiring freeze. So that doesn't support growth, right? Government jobs that are not needed are kind of like universal basic income, in my opinion. I made that argument this morning with course members. Like, if somebody's at their government job and they're not doing anything, it's kind of like they're getting a stimulus check, right? And that is inflationary. That is stimulating. It stimulates the economy. Okay, fine. Does that mean it should be done? No, I'm just saying it leads to more consumption and more inflation. It creates demand, basically, induces demand. Removing that makes the government more efficient, yes, and it makes the government more responsible, but it's counter counter-stimulus. Think about that. You lay off government workers who aren't doing anything anyway, you end up having what? Counter-stimulus. So remember that. You've also got AI CapEx spending potentially to slow. Give it 6 months to a year, you'll see it slow down. Pricing power at companies going down. Starbucks just yesterday, minus 4% year-over-year comp sales. Now the stock's going up on hopium that the Chipotle CEO is going to, be able to do some really cool things. But the point is, you are seeing all of these ends of a candle, so to speak, burning and slowing the economy eventually. Now, Jerome Powell doesn't really acknowledge these and just sort of says, if we see those become a problem, we'll cut. My concern is that sort of cutting will end up being too late. Because really the upsides of a Trump administration, like cutting regulation, fiscal spending, tax policy, tax cuts and all of that stuff will take time. And time is something that an economy that's on the doorstep of a recession, a deflationary recession at that, generally just does not have. But we didn't really get much from the Fed beyond a shout out for the Meet Kevin courses over at meetkevin.com. Coupon code expiring January 31st at 11:59. Remember, you get a blue check mark in live streams. You get the course member live streams, so you get to chat in all the live streams, the public ones as well. You get lifetime access to the courses and the content, the trading alerts if you're in the Trumponomics course or Stock and Psych group, the Alpha Report reports included for free, text, email, everything. I did take your suggestions, though, and Stocks and Psych and Trumponomics will be getting that alpha report. And we'll see. We might have a monthly option as well for people who just want the alpha report, but I suspect it'll be cheaper for you to be part of the courses. So take advantage of that before the prices go up. As far as the economy, Powell makes it clear, look, we're 100 basis points lower, so we've loosened, but we are still meaningfully restrictive right now. So he actually does acknowledge that the economy is still getting compressed somewhat by rates, but then on the flip side says GDP is fine, the economy is fine, growth is fine, jobs are fine, we just need a little bit more progress on inflation and everything is fine. Is kind of the way he came across. He also watered down FATE again, flexible average inflation targeting, suggesting that that was really only designed for a moderate overshoot of inflation. And other than that, we had some immigration commentary. Now, on immigration, this was interesting. He actually talks about how Donald Trump has, first of all, had no contact with Powell. So, everybody's been sort of worried about the potential for Powell to get fired or threatened by Trump to lower rates. So far, there's been no comment or contact between the two. And Jerome Powell said flows across the border have decreased very significantly. He actually sees that as potentially a way of tightening again the labor market, which could keep the unemployment rate low. Now, this depends, though, because and he says this. He said, even though you have less or fewer people coming over, you are in a situation where you also have less new jobs being posted. So you kind of have them moving in coordination. And again, this is where we have to be careful, because if layoffs start happening, even though we say downside risks to the labor market appear to have abated and inflation is trending down, we don't need to be in a hurry. If layoffs start, we will see a rapid increase in the unemployment rate, too little hiring, and we'll probably cut a lot faster. So to me, bottom line out of all of this, I think that this is probably as bullish as you could have had Powell. You had no warning that we were going to have a market that should start preparing for a rate hike, which I don't anticipate anyway. I thought was kind of ridiculous, that the suggestion of it, but a lot of people on Wall Street were worried about it, so I brought it up. But it's definitely the wrong direction, in my opinion. Where markets seem most focused now is going to be on earnings, and I'm actually not an earnings bear. I kind of think there's a good chance we end up having really good earnings. I mean, we've got Facebook coming out in a little bit. We've got Tesla coming out in a little bit. Microsoft, who knows? Maybe this will age like milk to say that, but I think you're going to see record profits at some of these companies, and I don't think you're going to see them say that DeepSeek is bad. I think you're going to see them say that DeepSeek is actually in something that's going to drive efficiency and drive earnings per share, and this is a good thing for Facebook and for Meta and everyone else. Welcome, Steve, to the chat. You'd be happy to know that we're now using a Dell 4x4 computer screen. You'll have to watch this morning's course member live stream to see about it. But anyway, to see which one. But anyway, we did not get Fed bingo, and that's what we got on the Fed today. So I would say overall bullish in that it really just kicks the can down the road. And now you just have to see what is the impact of potentially any other black swan, a further uninverting yield curve, that 50 to 90 range. And of course, what we get through earnings. I have a hard time thinking that earnings for Q4 are going to be bad, but I also don't think we're in a place where we're going to see data that says the bond market should see higher rates anytime soon, which does mean there's a chance in the 80s here, tickers like TLT might be closer to their bottom. But then again, who knows? Everybody's been trying to look for a bottom, including myself, for a long time on TLT, and it just kind of keeps going down. So we'll see, but it just doesn't seem like we have new inflationary effects. And I do think it's interesting that Powell specifically mentions that we haven't seen much in the way of tariffs yet. That's pretty bullish from the bond POV there. So That's what we have on what Jerome Powell said today.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.